Well, economic uncertainty, especially in Europe, and also the possibility of more stimulus from the Fed continues to push the price of gold to record highs. Michael Siri is the head of SiriFutures.com. He joins us from the CME in Chicago. Thanks for joining us this Monday. Appreciate it.
Sure.
Let's just talk about what you think the biggest driver is behind this surge in gold.
I think just one word, just demand. I mean, you have the euro currency down 100 today. In the old days, gold would be down $10. Gold is up. Then you have the euro currency up 200, gold's up. So it's regardless of what the dollar is doing right now, people are just scooping up gold and silver. Those two are, silver even especially, are even hotter than gold.
And we'll get to silver in a second, but Michael, is it this flight to quality, this flight to some sort of security, that tangible asset of gold or of silver, given what's happening in Europe, given the fluctuation of currencies around the world, given comments from Fed Chairman Ben Bernanke on 60 Minutes not ruling out a third move in terms of quantitative easing, more stimulus possibly coming for the U.S.?
Right. I mean, that's just going to fuel the fire higher again. Now, silver's already made contract highs for the year. Gold is still about $10 away, but it just looks like these markets are on a tear, and they look like they're just going higher. You know, and what they want is they want higher prices. The federal government was afraid of deflation. They want higher prices. So if they do another QE2, this stuff could go, you know, who knows how high.
What do you think is pushing silver prices higher? Because you say that's really what people should look at, not gold, but much of the focus is on gold.
Yeah, silver, I think, is just catching up. I mean, gold's way up there, and I think silver's catching up. One point I want to make, when you said flight to quality to the gold and the silver markets, in my opinion, it's really not a flight to quality. You can still lose money buying gold. Gold could go from $1,400 to $900.
Sure.
That's not a flight to quality. So it's not like I can just put $100,000 in gold market and forget about it because I can't lose. No, you can lose. The only thing flight to quality are the bonds, where you can't lose because you just get a very low interest rate. But you can lose in gold and silver, and I think people need to know that.
It's a very good point. Are you saying that there's still a lot of danger in the gold market, in the commodities market right now when you're looking at precious metals? I mean, it doesn't seem like you're one of the bulls that's calling for, say, gold 2,000 or 3,000 in the near term.
Well, I think it could go higher. I just kind of have a feeling that people don't think they can lose in it. And when you have a feeling like that, that's just not good. Oh, I'll just buy gold. It's a safe haven. I don't have to worry about it. Well, gold can still, lose $300-400. Who knows where it can go? But you definitely have risk on when you're buying gold and buying silver. It's not just forget about it and see where it is in 5 years. You could be in trouble if the prices go down.
Michael, where do you see gold by the end of this year, and also in throughout 2011? Where do you see gold futures going?
Well, it looks like it's going to the 1,500, 1,600 level here just in the next 3 or 4 weeks. Silver is almost at $30. Who knows where that could go? If the demand keeps going, even a 20% rise in gold next year is $300. You could be at $1,800, $1,900, and that's what it's been doing. It's been doing 20-30% a year.
One bearish fund manager that I spoke with called out the inverse relationship he sees ahead for gold and the Dow crossing. He even called for, in the next few years, gold 6,000, a huge decline in the equity market. Any chance of that, in your opinion?
I don't think so, because if you remember in 2008, when the big decline in the equity market happened, gold also went down because people had to sell all assets. So I think if there's a big plunge in the S&P, I don't think gold and silver will survive that. I think they will go down as well, and history has proven that. People need assets. They will take money off the table on the one things that they've made money to cover some of their losses. I just don't see the crash in the S&P, and 6,000 in the gold. One thing, I've been a commodity broker for a long time. I try not to predict because some of these prices just are amazing, but it could go anywhere. It could go anywhere.
Michael Siri, thanks so much. Appreciate your time.
Thank you.